Good morning. It still is just about morning. I can't see why everyone's not rushing back from their coffee break. But for those of you that don't know me, I'm Andy Fabian, CFO. And I'd like to sort of follow on from Jen's presentation on the pricing and talk a little bit about the finances and an overview on that, and also lead into the budget. So in terms of where we're at, what I'm going to talk about is the sort of current financial position, and then a little bit about what's happened in 2024, and then more importantly, we're planning for 2025. And then I'll take any questions, but if they're difficult ones, I'll refer them to my wonderful finance team that are sitting on the far table. So in terms of a high-level summary, you were actually sent, but I don't know if you read or saw that it was in there, a high-level summary of the budget for next year with the EGM notice. But I guess, the good news is we're broadly on track with what was presented to you a year ago for 2024. And I would say the economic situation is a bit more stable now. Despite yesterday's inflation going up a bit, I think the trend on inflation is down compared to the last couple of years. Perhaps there's a few geopolitical challenges coming next year that we don't know about. But we at LINX continue to expect growth in capacity and demand. And I think, again, following on from what Jen was saying, we are looking for sort of measured price reductions for LINX. So for 2025, we're budgeting more growth, and in 2024, we've had some very good growth as was planned. In terms of the operational results, I guess the sort of level of members has been fairly static. We're always looking to grow that because of the principle, the Metcalfe principle that I learned yesterday, and the importance of the network effect here. So, but I guess what's happening is there's more growth in capacity per member. We've had very good growth in 400G, so more than doubling, which is obviously where we're looking to grow. Maybe some of that's happened slightly later in our year than we were expecting, but that's good. And 100G is also looking to grow quite well this year. Plus the 30G that was introduced a while ago, as Jen mentioned, that's grown very well this year. And overall, the connected peering capacity is up 12%, and so that's obviously an important factor. So what does that mean for the numbers? Well, having set the budget a year ago and presented that to you, we're pretty close to it. Slightly off on revenue and slightly over on costs for a number of factors. Some of it is delays in some of the overseas projects that have slightly hit the numbers, but I think it's pretty impressive. The budget that was set by my predecessor has been pretty closely followed. And there are also a number of one-off costs in 2024 that mean there might be a slight deficit, but we're looking to do all we can to try and alleviate that. And the other thing is the CapEx is slightly below what we were budgeting, but we're still investing a lot in the network. So 2025, Jen's obviously outlined some of the pricing plans we have. That's all integrated. We work closely with the sales team on building the budget. And I think the key number here is we're expecting connected capacity to grow 18%. And I guess this goes to the core of LINX and the question that came about how are we able to reduce pricing. I guess our philosophy is the more members we get, the more capacity we get, the more we can spread some of our fixed costs and overall grow the business, grow the revenue in a sustained way, and then ultimately reduce prices, but in a sensible, managed way. So that's the plan. There are things that affect our costs. Inflation is a little bit lower than it has been, but there are some areas where costs are going up. Some areas where they're coming down, which is good. But things like regulation is going to be a bigger cost going forward. So what does that mean for the numbers? Again, we're expecting good revenue growth in 400G, 100G, the new pricing plan for 50G. We hope will have some takers and give us growth there. So we've also got growth from reseller services, colo services, and so forth, plus our overseas expansion. But we are continuing to reinvest in the business. So we're forecasting a very modest surplus for next year and capital expenditure roughly the same as the budget was for this year, but we're slightly below that. And overall, we're going to end the year, we expect, with about 9.4 million of cash, and cash is always king. So we're always managing that very tightly. So just in conclusion, LINX is still in a very strong financial position, which is good. It means I can sleep at night. We have very high levels of recurring revenue, and we continue to generate operational cash positive, which allows us to invest in CapEx and growing the business. So with that, I shall see if there's any thoughts, comments, questions.
Okay, any questions? Excellent. Well,
I was told there's never any questions for this.
Fine.
I was hoping this might be the difference. No questions. Good. All right, well, thank you very much.
Thank you very much, Andy.
Thank you.
Thank you.